Today I'm going to be reviewing my portfolio as of 2020. This has been a quite highly requested video, and I wanted to give you an overview of what my portfolio looks like. Um, there are a few things I want you to consider before I start going into my portfolio. Into the portfolio. The platforms I use are the ones I've created videos on before. I use Digiro. Most of the portfolio you're going to see in the video is going to be from my Digiro account because I've had it the longest and it's just been around and it has the time to build up. The other one I use is another one I've created a video on. Check in the description for that is Revolut. Revolut has just recently in put in a trading platform, so you can actually start trading stocks. At the moment, they only support stock buying. They don't actually support ETFs, although from their communications in the media, they are working on adding support for ETFs, which will be awesome. I also am looking into the other platform that I did a review on called Trading 212. At the moment, I can't invest in this because I'm having some issues with basically, like because of the whole situation in the world, I need a new passport. So, but the post office that get the passport is closed. So basically, they're the three platforms that I will invest to going forward. There may be a fourth later on. Again, I like to diversify where my portfolio will sit. But in this video, we're going to focus mostly on my De Giro profile. If there's interest, I will show what's in my Revolut account, but it's very small. And again, let's get started. As you can see on the screen, my portfolio is mostly in ETFs. It's 60% in ETFs. I do have individual stocks. Again, I explained this in other videos. This is mostly in companies I like what they're doing, so I want to invest in them individually, and an ETF doesn't give me that much of that company, so I want to invest more money into them. I also have some bonds which make up about 13% of my portfolio. That's basically my portfolio broken down, right? In terms of the in that's broken down into its individual areas, here is the entire picture. So as you can see, taking up most of my portfolio is the iShares Core S&P 500, usually whatever, right? It's the accumulating ETF that I discussed in many videos. That takes up the majority on my portfolio. The next one is the Vanguard S&P. This ETF you can no longer buy because I bought this before the change of law came in, but it's still in my portfolio. It might go away eventually, but it stays there. Its value, I can't buy any more of it, but it will go up or down based on the market. The next biggest chunk is Shopify. Now, I've discussed Shopify in some of my videos. Shopify has actually at this current time it's actually taking up 10% of my portfolio. One, because I invested in Shopify around a year or so ago, just because I liked what they were doing. And in the course of a year, they went from around €300, $300 to now just over, there you go, $766. So my portfolio gains have actually been a lot because of Shopify, and for the current world situation, my portfolio is actually doing pretty well. The other kind of mentions here that I would probably mention is let's see, I have some bonds up here. As you can see, there's one called the Vanguard Total Bond Market. That, again, you can't invest in that anymore because it was a US fund. When the rules came in, it changed it. The next kind of one is like the Euro government bonds. And again, same thing. It's the same with the bonds. The rest of the ones are kind of very small. I have some Canadian banks. This is what these three are because I kind of like the Canadian banks, and they're actually down at the moment. So in terms of my, actually good to keep investing. I have a small part of Nike, a small part of Royal Caribbean Cruise. I have a small part of Workday, and I also have 4% in a company called Peloton. They make one of them, like them kind of really fancy bikes. But as you can see, like my portfolio is actually quite simple. It might seem like I actually don't have a lot of stock in a lot of companies. Most of my portfolio, as mentioned earlier, are in ETFs. Then I have some in individual stocks, which I quite like. I mean, they're just companies that I like what they're doing, and I have some bonds. Um, this portfolio The total value I'm not going to discuss at the moment, but it's up about 20%. I started investing about 3 or 4 years ago, and it's since then it's up about 20% during this 2020 time, which I think is quite good considering what's happening in the world. Now, look, I'm not some magic magician, or I just got lucky, and also, like I said, since I invested quite a lot of money in Shopify early, a lot of my gains in my portfolio have been because of Shopify. Now, one thing I should mention here is when something like that happens, it's very important to rebalance your portfolio at least once or twice a year. So, for example, like that, like Shopify, the company doubled in value, suddenly my portfolio kind of gets out balanced. So, I should sell some of the stocks and buy some of their stocks. And I've already done this, so I've rebalanced it a little bit to basically reduce the risk, basically, of one stock taking the majority of my portfolio. The biggest tips, or here's some tips I have for investing in your portfolio, right? Don't try to time the market. The biggest mistake you can make is trying to time when to invest. The other biggest mistake is that people say to me is, I'm gonna invest when the market drops. That's horrific advice. Do not try to do that. Start investing now and just invest consistently on a regular basis over time. This is what I've been doing. I started off with like maybe 1 or 200 euro per month, and over the last, let's say, 3 or 4 years, I've slowly increased that to around just over 1,000 euro per month that I'm investing in the stock market. Now I want to invest more, as much as well, not as much as I can, as much as I can, as I feel safe that I can. But the most important thing is just get started. Like, start now, start small. Use some of the apps I've reviewed on the channel, like Revolut, to buy partial shares to even get you started a bit quicker. Most of this portfolio specifically is on the Giro. I do have some stocks on other platforms that don't wouldn't contribute too big to this, but that's essentially it. Like, just do it consistently over time. I'm not trying to get rich quickly. I'm trying to build wealth over the long term. And again, this is something I'm really into in finance and like investing, but I don't look at my portfolio every day. I just sometimes log in maybe once or twice a month to check how it's doing, but otherwise I'm just generally leave it alone. And that's the best piece of advice I had. I heard a story that when one of the big investment companies rang a bunch of their clients and their best performing clients, and they asked them like, how did you pick stocks so well? Their biggest gain, the biggest customers were the ones that forgot they had accounts with them. So that shows you, just leave it alone and just invest consistently over time. And once a year, log in and rebalance it whenever you need to. Like this year, I had to rebalance because Shopify got a big boost and I bought some other stocks. The other thing to mention is everyone has their own risk profile, right? I have a specific risk profile associated with me. That's to do with, I take into account my age and stuff like that, and where I want to go in the future. I also have an emergency account that I've built up over time as well, that I can afford to invest more money into this, and if something was to happen to me personally, I could weather the storm, let's say. And that's very important that you do that type of thing. I will discuss in the videos emergency funds, advice, and steps in your financial journey, but that's essentially what you need to do. And again, for bonds, people say a good idea for bonds is take your age, and that's the percentage that you should have in bonds. I don't particularly agree with that. Like, I'm 29 at this moment and I have 13% in bonds. To me, that's safe enough for me. But I have a bigger risk profile than maybe some people. Some people are actually 100% in individual stocks, which is wouldn't be for me, or 100% in ETFs, which is another way of looking at it, right? And again, you don't have to do the way my profile is. You can simply just take 2 or 3 ETFs, diversify. I mean, take an ETF from like the US, take maybe a whole world ETF, take maybe some bonds, and then that's it. You don't. Most of these individual stocks are just me because I enjoy what some of these companies are doing. And that's pretty much it. If you have any questions about my portfolio, or even better, if you have any critiques on my portfolio, I'm quite invested into the US market. Example, the S&P 500. For me, that's okay at this moment. I will probably start investing in other countries, for example, like emerging markets or like just like Asia, or even just the total stock market, because there are ETFs that do the entire stock market. At the moment, I feel okay with just investing in the S&P 500 just because it's easier for me. But I that is one critique of my own profile that I will say is that I'm not invested enough in emerging markets or even in some of the wider kind of non-US markets. Like I do have some stock, like for example, I do have some Canadian stocks, which has some diversification. But again, Canadian and US stocks sometimes depend on each other. But again, that's one critique that I would have with this profile. Again, this is not the most perfect profile in the world. It's just what I've done over time, over the last few years, and I hope it helps you in some way in your financial journey. Please put them in the comments. I would love to hear what other people's portfolio looks like. Again, this is a highly requested video, so I hope you enjoyed it. And until next time, bye.